Most beginners lose money when trading crypto, but it doesn't actually have to be that way. Here are 5 mistakes to avoid when trading on Bybit. None of this is financial advice, but let's dive into this. Number 1 is overusing leverage. So if we go to the trading screen right here, we can see we have our full setup here as you would expect on any exchange. We have our chart on the left, we have our liquidation, we have our order book here on the right, and this is where we can take a trade on the far right. Now, leverage is at the top right here, where we can pick cross leverage or isolated leverage. Now, isolated is probably what I would advise for beginners because it keeps you out of trouble and you really just know where your liquidation is. Next, we have the amount of leverage that we need. So some people will prefer to trade with 3x or 5x. Others will prefer to trade with 50 or 100x. But it really depends how experienced you are and how well you know how to use leverage. If you're a beginner, I would definitely not advise using anything over 10x, and saying that probably 5x is better for risk management. And the reason for this is because of your liquidation. So if we go ahead and put in, say, 5% of our portfolio here, which is $12,000, at the bottom, what we can do is press the long button, and then it's going to come up with our liquidation price here at 90,000. And what does this mean? Well, basically, if you get liquidated on any exchange, it basically means you can't afford to keep that position open because you are too far underwater or too far in the negative. So if price gets anywhere down here, we are at risk of liquidation and losing that trade where it's automatically closed and you lose all the money. Now, obviously, the goal is not to get liquidated, but if your trades go well, then you will be nowhere near this. And risk management is super important to this. And I guess my point here is don't have your liquidation anywhere where it can be reached. Number 2 is not setting stop loss orders. So what does this mean? Basically, when you open a position, you have the option to actually set a take profit and a stop loss. So a stop loss basically means if price gets to that point, you are going to cut your losses and close your trade automatically. So if I'm opening a long here at 112,000, maybe I want to have my stop loss somewhere around 110,000. So in this case, I would only lose $251. Whereas if we were to open this trade and get liquidated, then we would lose all of it if we went underneath that point and under 90,000. So this is just a great way to manage your position and keep your losses low with your take profits higher and trying to keep your ratio good there. Now, the third point is ignoring risk management. So many people make this mistake where if you have 100 grand or 250 grand in the bank here, then yes, what you could do is just go all in 100x and gamble the money. Obviously, this is an example of what not to do because most professional traders won't even use 1% of their portfolio per trade. Now, naturally, you might be thinking, I need to use more to catch up to those traders. I need to risk more, but that is where you actually get drawn into bad risk management. So you want to avoid that at all costs and always go with a low percentage of your account balance when opening trades. I like to keep this between 1 and 5% on my smaller accounts. And then my bigger accounts and strategies with higher leverage, I would definitely use a lot less, something like 1% or under. Guys, this video is sponsored by PrimeLink. Now, PrimeLink is definitely something you should be using because you get backlinks, you get QR codes, you get analytics, and much more. So definitely check out PrimeLink in the description. Let's get back to the video. Number 4 is chasing the market. So as we can see here on the left-hand side, we have the Bitcoin chart right here. And naturally, humans typically love to just get in at the top every single time. And this has become a pretty famous meme where, yes, I long the top and then I sold the bottom, right? This is a normal thing in crypto to happen. This is just based on human psychology. The point of trading is to not fall for that trap. Always have some kind of plan and follow that plan to a T. So for example, in this case, if we're breaking out here and we've gone over our resistance, we've got a retest, we break the high, all of this good stuff, then we might want to get in here. But an example of what not to do and not chasing the market is we've seen Bitcoin pump 5% up here. Let's get into a long because we're going to 150K. No, that is absolute hype, adrenaline, and that's how you can get burnt in the market. So always follow your plan, and of course, always actually refer to your colleagues, other traders, and see what they're doing and kind of analyze what they're doing as well, because you won't be affected by adrenaline, and then you can reference that back to your own work. Number 5 is skipping education. Many traders will learn a couple triangles or learn a few things about RSI and then just think that is their golden ticket to becoming a millionaire trading. It's just never that simple, and that's why so many people get burnt. So never skip your education and never actually shortcut your way into the market that way, because you're not going to be learning the right way, and really you'll be destined to lose in that way. So what you should be doing is using the Bybit Learn section and the Bybit Sharks Alpha Group when it comes out. We'll get into that in a minute. But here we can see the Learn section. So we're going to get market insights, we're going to get trading 101, investing 101, and basically you have all of these tools, all of these articles where you can learn from the ground up, beginner trading, all the way up to advanced derivative market trading. So this will be a great way to absorb all of the knowledge out there and actually use strategies that already exist or create your own. Now, if you are interested in getting involved with Bybit, then definitely use Bybit Sharks when you sign up. And there is a very good reason for this. This is basically going to be a hub of traders. And if you use their link, they're actually going to be giving out an alpha group soon where a bunch of traders can come together and discuss and make good decisions, just like Wall Street and the hedge funds do. But using this link is basically the same as using the normal link or going directly, but you get all of these bonuses completely for free. So it's really a no-brainer using the Bybit Sharks link. Definitely check it out in the description and you will be sent to this page here. As you can see, this is Bybit.com. This is simply a referral link, but if you use it, these guys will actually contact you when that alpha group's released, and you will have a massive advantage compared to other beginner or advanced traders. Now, signing up is super easy. You can put your email in, your password, or you can use phone number as well. And you also have the option to sign up with Google, Apple, and Telegram. You also get tons of gifts here using this specific link. As you can see, you can get up to $30,000 from trading some pretty low volume amounts. But hopefully you have enjoyed this video, got some value from avoiding all of those mistakes we talked about. You'll be trading smarter and protect your capital if you do follow these steps. But definitely learn the right way with Bybit and start trading confidently. Sign up with the link below and gain invaluable access to the Telegram group today for free with Bybit Sharks.